How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 within my Vanguard brokerage account. Now, over the past couple of weeks, I'm sure you are all well aware the tensions between Russia and Ukraine have certainly been heating up. It is an all-out war. Russia, over the past couple of days, have been ramping up their assaults on Ukrainian cities that is making for a ton of fear and uncertainty in the market, which is driving all the rather recent volatility, leading us right into March, where the Federal Reserve is due to come out and begin to hike those interest rates, which I only believe is going to add to the fear and uncertainty and make for more volatility. Now, as a long-term value investor, this is certainly the time that we can all be capitalizing on. In terms of my personal account, we are actually down from my last video by $23.09, leaving my account sitting at $85,423.65 on the day. And now ultimately, here I am in today's video, and I want to talk about what exactly I've been doing amidst all of this volatility. I've been able to smash through 2 of my financial goals within my portfolio, and now I am doubling down on 3 specific stocks, which I want to get to in today's video. Before we dive in, tap on that thumbs up button and help me grow this channel. And if you haven't already subscribed, make your way over to doing so. I'd certainly love to have each and every one of you on this journey with me. Now, YouTube, let's go ahead and dive right in. All right, YouTube, so I've said this before, but I want to come right out and say it again because I think it's important for you to understand that I, as an investor in 2020, made a giant mistake. As soon as the market hit some of its all-time lows that we hadn't seen in decades, I got incredibly excited because I saw all of the discounted stocks that were out there, and I went on a bit of a buying spree, amassing a portfolio of over 40 total holdings. Now, since then, I've only been trimming my positions down because 40 positions is just way too much, at least in my opinion, to have within your portfolio. And this is not to say that diversification is a bad thing necessarily, but if you're spread way too thin across all of them, well, those ROIs that you're looking for are not necessarily going to be coming your way, at least not as soon as you would have liked them to. And don't just take that from me, but take it from some of the investment stages of our time. Have a look.
Diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance.
I don't believe in diversification at all. I would own one stock if I could find one great stock. Diversification is a big mistake. I call it diversification. You buy this thing that might balance this other thing and they both go down. So I don't believe in diversification at all. I would own one stock. But what I do believe in is if I find 10 good stories, they're all equally attractive, I buy all 10. And I wait to see them unfold.
And I've always had the view that, why not own the best 10 or 11 investments as opposed to ideas 12 through 25 or 12 through 100, which is more typical. And, I think there are very few great investments at any one time. So the ability to concentrate is an enormously valuable asset of a strategy.
All that asset management, diversification, that's for idiots, right? Because you can't diversify enough to know what you're doing.
The idea of diversification makes sense to a point. If you don't know what you're doing and you want the standard result and not be embarrassed, well, of course you can widely diversify.
And there you have it, diversification, according to Peter Lynch, which is the one word that I would use to sum up all of those short clips. Now, this is coming from a man who holds 37 total positions within my portfolio.
What? What an idiot.
Yeah, I'm gonna have a lot of work to do in terms of cleaning up my portfolio and trimming down my positions, all in 2022, which is what I'm working to do. Now, I've begun to do that work, and I've already begun to focus on at least 5 high-quality positions to just narrow in on and really build up the positions. A matter of fact, just with all of the volatility rather recently, I've been able to achieve 2 share count goals, the first of which is with Apple. I've been able to cross over that 100 share count mark, currently sitting with 102 total shares worth of Apple, leading to my next big investment, which was Realty Income. Both of these companies I've spoken a lot about in my videos. Realty Income is now sitting at 100 total shares within my portfolio. So I'm on to the next 2 positions, which I'm going to be focusing on. And then the third position I'm going to be talking about today is just one that I'm continuously dollar cost averaging into. So now this all leads me to talking about the next position I'm really going to be focusing on and doubling down on growing my position to 100 total shares of, and that is Johnson & Johnson, ticker symbol J&J. Now, Johnson & Johnson, of course, a healthcare giant that has been in business since 1886 and has not only been leading the healthcare industry, but has remained a powerhouse of a dividend investment for over the last 60 years, as it has earned an honorable title of a dividend king. And in my opinion, there are dozens of healthcare investments, but Johnson & Johnson is really just a staple that any dividend investor can add to their portfolio. Currently, they're sitting with a market cap at $430 billion, with an extremely healthy balance sheet netting $4.74 billion just this past quarter alone. In terms of how and where they're trading, Johnson & Johnson's PE ratio is hovering around 20%, with its 52-week high at $179 per share and a 52-week low at $151 per share, whereas right now it's only trading for around $162 to $163 amidst all of this volatility. So of course, I am just doubling down on this position by dollar cost averaging my way in. Now, it's most important to be looking into Johnson & Johnson's future, to which I am sure you are all well aware that Johnson & Johnson is going to be rolling out their consumer goods segment, just keeping the pharmaceutical segment as well as medical device segment underneath the Johnson & Johnson name. I personally believe that is a great move and a step forward for Johnson & Johnson. And in even more recent news, Johnson & Johnson just the other day won out on a court case when it came to baby powders. Now, not only that, but the FDA just gave their stamp of approval on one of Johnson & Johnson's most recent developments in terms of cancer therapies, all of which is making analysts incredibly excited, driving up their median stock share price to $180 per share and a high stock share price at $215 per share, with their current dividend yield sitting at 2.55%. Now, at present, I hold 35 total shares worth of J&J, and again, with my goal being 100 total shares, I'm just going to continue to dollar cost average my way in and grow Johnson & Johnson to one of my top 5 positions. Next up, I'm going to be doubling down on Bank of America, ticker symbol BAC. Now, Bank of America was founded back in 1930, but actually took its present form back in 1998. It's not America's largest bank, but definitely a sound bank within the United States. And honestly, I don't see a lot of YouTubers talking about it, but over time it has grown rapidly with over 4,600 different retail locations. Current market cap sitting at $342 billion with very healthy metrics across their balance sheet, bringing in a little over $7 billion this past quarter. And ultimately, over this past year, they rose by 40%, hitting a high of $50 per share before coming down to around $42 per share. Now, ultimately, I believe Bank of America will rebound and is one of America's most soundest banks, in my opinion, to invest in, with a current PE ratio sitting at 11%. And just looking into the future, with the Federal Reserve raising those interest rates, Bank of America is due to actually fare very well. Of course, that's how they're going to be able to bring in even more revenue. Now, analysts are very excited about Bank of America's future, coming in at a median stock share price of $51.90 and a high stock share price at $66 per share. Now, at this point in time, I only hold 20 shares worth of Bank of America, but same as J&J, just going to be doubling down on this position and collecting on Bank of America's dividend. It's coming in at a dividend yield of 1.87%. And last but not least, I'm just going to continue to deploy my fail-safe strategy of investing into Vanguard's Total Stock Market Index Fund, ticker symbol VTI. Now, a very similar fund is Vanguard's Total Stock Market Index Fund, Admiral Class, that is VTSAX. Both of these funds are almost just about the same thing and allow you to invest in the broad market, covering small, mid, and large cap companies, both of which have growth opportunities as well as value investments within them, and over 4,000 stocks within each of these funds. Currently, I hold 37 total shares worth of VTI and 224 shares worth of VTSAX. Again, very similar funds. You're really just buying America when you invest into either of them. Both of these positions combined, they make up about 40% worth of my entire portfolio's value, and I'm only going to continue to dollar cost average my way into VTI, growing that position to 100 total shares as well. Now, YouTube, that is it. We have finally reached our goal with both Apple and Realty Income, and now here we are building up our positions with Johnson & Johnson and Bank of America, all while playing it safe by just investing into the entire broad market with Vanguard's Total Stock Market Index Fund. If you've liked what you heard, you learned something new, drop those comments below and let me know. Also, let me know your top 5 positions within your portfolio. Keep in mind, I am not a financial advisor, so always do your due diligence following my videos. And most importantly is tapping on that thumbs up button and helping me grow this channel, as well as subscribing to the channel, because I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, until the next video, I will see you all there.